Saludamos ya a Jay Pelosky, founder at TPW Advisory. Jay, good afternoon, good morning for you. Thank you, as always, for joining us in Negocios Televisión.
Very happy to be with you, as always. Thank you.
Jay, new threats on the horizon for the U.S., a possible government shutdown. The Senate is trying to find a 45-day solution, but what consequences could a shutdown have now?
Well, you know, it's interesting you mentioned that, right? Because the newspapers here in New York and elsewhere are filled with stories of the shutdown risk or the strike risk with the auto side or high gas prices or return of student loan payments. They call these the quadruple threats, so 4 threats. And to me, as a market investor, the point is that the market is already aware of all of these threats and has spent effectively the last 2 months discounting them. So I don't really see a shutdown or the strike or really, frankly, any of these issues being significantly negative on a forward basis for the stock market. I think the market, we must remember, is a forward-looking discounting mechanism. So it's already priced these risks in, and I expect any kind of resolution will lead to significant shifts in sentiment and cross-asset prices.
You spoke about the stock market, but do you think that a government shutdown could undercut the U.S. dollar rally?
Well, it's a very good question, because what's interesting is that the hedge fund community, the so-called smart money, is as confused as the rest of us about really what's going on in the global economy. And so that community has jumped on the latest trends, and it's across assets. So the dollar has rallied for 10 or 11 weeks. It's the longest rally in almost 20 years. And hedge funds are very long the dollar. They're very long oil. They're very short U.S. stocks. The most short position since the COVID hit in March of 2020. And then fixed income rates also very short. The most short the hedge fund community has been in the treasury market for about 1.5 years. And so I think all these trends are very extended, and we're about to see, and seasonality suggests that the next month, October, November, very positive for equities. I expect to see a reversal. So the next 30 or 40 basis point move in the 10-year treasury, let's say, which is now at 450, 455. The next 30 basis points are probably going to be a rally back to 415, 420, not another extension up to whatever, 485 or 5.
Jamie Dimon, Jay, said today that there's a risk that the Federal Reserve might have to raise rates to 7% and that this would really hurt the U.S. economy. Do you think that this can actually happen?
Well, he's certainly right in that if rates were to go to that level, it would negatively affect the economy. But look, Mr. Dimon is has had a fantastic career as a banker, but he has not had a very good career as a prognosticator of markets. And so really, I don't think his opinion is particularly valuable. As I said, the Treasury sell-off is very, very extended. The Treasury market is very oversold. The TLT ETF, which is the 20 to 30 year, the long duration part of the Treasury market, had its biggest volume last Thursday and Friday that it's had again since COVID 3+ years ago. So I think we're just dealing now with kind of the aftershocks of some of these moves. As I said, the hedge fund community is trying to press some of these, try to break technical ranges and get more activity. But to me, the reality is that we're going to have continued good disinflation in the United States. We're going to have continued decent economic growth. The Fed took recession off the table in its forward-looking economic estimates last week. And I think that's really the point. And therefore, earnings growth, which has continued to be robust. And remember, starting in October, we're in earnings season for Q3. Better earnings are going to support equities, and you're going to see a reversal I think, in all four of these directions. Dollar down, rates down, stocks up, oil stabilizing around current levels.
I wanted to speak to you about oil futures also, because the rally in oil seems to have run out of fuel, kind of, because today we're seeing already a tiny upside. But again, economic worries are weighing in oil. Do you think that oil will never beat the $100?
Well, one thing you learn in this investment business is to never say never, right? So I'm not going to say never. But look, we have been bullish commodities for the last couple of quarters. We're double weighted in our global multi-asset model here at TPW Advisory. So double weighted commodities, very underweight U.S. Treasuries. And so that's been a great trade for us. But going forward, we don't expect a whole lot of room. Again, the energy stocks, not necessarily oil futures, but energy stocks are very overbought. It's the most overbought part of the stock market. Most of the stock market is oversold after several weeks of going down. So we still like energy. We like industrial metals as well, because we think we're in the early stages of a global economic recovery. We're very bullish China because we think the year-over-year comps in China are going to be very easy. Q4 last year was the shutdown of the major cities. Remember, Shanghai, Shenzhen, all locked down. That was now a year ago. So going forward, the year-over-year comps are going to be very easy, and that, I would imagine, would provide support for things like the oil price. Just as one data point to tell your audience, Trip.com, which is the biggest travel booking agency in China, reported a 20 times increase in year-over-year outward bound bookings for Golden Week, which is the major holiday week next year. So that's just an illustration of the comparatives we're going to see year-over-year in China. They're going to be very, very easy to beat, because a year ago, China was in lockdown. And that, I imagine, would provide support for the commodity complex, energy, and more importantly, from our view, industrial metals.
Jay Pelosky, founder at TPW Advisory. As always, it's been a pleasure to have you here in Negocios Televisión. Thank you so much.
Thank you so much.
Have a good day, Jay. Nos decía Jay Pelosky, entre otras cosas, que bueno, nunca se